How much investment return should I expect from the stock market? A financial advisor might answer with brevity, 10%, or he might give a more precise answer. He might say something like, well, over the long term, including dividends, investing entirely in stocks of the largest 500 companies in the U.S. earns you an annualized rate of about 10%. Even though this answer is technically correct, the problem is that sometimes the person walks away thinking that their annual statements are going to go up at a nice, steady advance of 10% per year. Nothing could be further from the truth. That is not going to happen. In fact, rarely does the annualized return of the S&P 500 ever hit 10%. On my count, according to a calculator which you can find in the show notes, since about 2021, twice in 64 years, it happened in 1993, 10.17%, and 2004, 10.82%. So routinely, each and every year experiences higher and lower returns. So the bad news first. It's been negative 15 times, and that's been anywhere between negative 0.74% all the way down to about 37%. Negative returns have even occurred 3 years in a row before. That was the year 2000 through 2002. But the good news, it's been positive 49 times, and 22 of those times have been up 20% or more. So the key point, as I've talked about before, which you can also find in the show notes, is that volatility is the subscription price one pays for returns. When you're told that stocks might return 10%, you need to set your expectations properly. Recognize that there can be some bad years. Also, you can't guarantee the future, but the pathway to 10% annualized returns in the past was only reached by rarely ever gaining that 10% in a single year. Keep in mind, that is talking about a portfolio 100% in the S&P 500. Most of your portfolios aren't 100% in the stock market, so you should expect different return. The stock market's not a bond. With a bond where you have a maturity date, you get X amount of interest, and then they give you all your money back over that time. That's not the way the stock market works. The stock market goes up and it goes down. The volatility is what gives it the good return. The thing is, a lot of people can't hang around with all the volatility. So that's the thing about the stock market. And I don't want to speak out of both sides of my mouth here, but the data shows you can earn 10% a year without almost ever earning 10% a year.